I think the safe assumption for an investor is that over the next 100 years, the currency is going to zero. That's my working hypothesis. A very dangerous environment. What brought in Hitler was the combination of the Weimar inflation, where they utterly destroyed the savings of the middle class in Germany, followed by the Great Depression. It was a 1-2 punch. And Hitler came in, crazy demagogue, with 40% of the votes, and pretty soon we had a dictator hell-bent for world war. So the history is not pleasant. And Germany was a very advanced and civilized nation, the Germany that Hitler took over. I always say that the interesting thing about that was little Albert Einstein, a little Jewish boy, got his entire primary education with the insistence of the Catholic Church in Germany. Now that is a very civilized nation. So if you let your nation deteriorate too much, what you get is a Hitler. We've proved it. Of course, in a modern democracy in the age of Keynes, you're going to get big government reaction. The reaction this time was bigger than it's ever been before in the history of the United States. They just threw money at the problem. And they were probably right to fear what was going to happen and to be quite liberal in throwing money at it, but they probably overdid it a little. They threw so much money so fast that it's hard for the restaurants to get people to do the work. But I don't criticize it. It's hard to make these decisions under pressure. Well, you have to be optimistic about the competency of our technical civilization. But there again, it's an interesting thing. If you take the last 100 years, most of modernity came in that 100 years. And in the previous 100 years, that got another big chunk of modernity. And before that, things were pretty much the same for the previous thousands of years. Life was pretty brutal and short and limited and what have you. No printing press, no air conditioning, no modern medicine, no. I don't think we're going to get things that were in what I call the real human needs. Think of what it meant to get, say, first you got the steam engine, the steamship, the railroad, and a little bit of improvement in farming and a little bit of improvement in plumbing. That's what you got the 100 years that ended in 1922. The next 100 years gave us widely distributed electricity, modern medicine, the automobile, the airplane, the records, the movies, the air conditioning in the South. And think what a blessing it was. If you wanted 3 children, you had to have 6 because 3 died in infancy. That was our ancestors. Think of the agony of watching half your children die. It's amazing how much achievement there's been in civilization in these last 200 years, and most of it in the last 100 years. Now, the trouble with it is that the basic needs are pretty well filled. In the United States, the principal problem of the poor people is they're too fat. That is a very different place from what happened in the past. They were on the edge of starving. And what happens is, it's really interesting, is with all this enormous increase in living standards and freedom and diminishment of racial inequities and all the huge progress that has come, people are less happy about the state of affairs than they were when things were way tougher. And that has a very simple explanation. The world is not driven by greed, it's driven by envy. And the fact that everybody's 5 times better off than they used to be, they take it for granted. All they think about is somebody else has having more now, and it's not fair that he should have it and they don't. That's the reason that God came down and told Moses that you couldn't envy your neighbor's wife or even his donkey. I mean, even the old Jews were having trouble with envy. And so it's built into the nature of things. It's weird for somebody my age, because I was in the middle of the Great Depression when the hardship was unbelievable. I was safer walking around Omaha in the evening than I am in my own neighborhood in Los Angeles after all this great wealth and so forth. So, and I have no way of doing anything about it. I can't change the fact that a lot of people are very unhappy and feel very abused after everything's improved by about 600% because there's still somebody else who has more. Think of the pretentious expenditures of the rich. Who in the hell needs a Rolex watch so you can get mugged for it? You know, I mean, yet everybody wants to have a pretentious expenditure. And that helps drive demand in our modern capitalist society. My advice to the young people is don't go there. The hell with the pretentious expenditure. I don't think there's much happiness in it. But it does drive the civilization we actually have. It drives the dissatisfaction.
How will this all play out, and what's the best advice you have for individual investors to optimally deal with the negative impact of inflation other than owning quality equities?
Well, it may be that you have to choose the least bad of a bunch of options. That frequently happens in human decision making. And the Mungers have Berkshire stock, Costco stock, Chinese stocks through Lilu, a little bit of Daily Journal stock, and a bunch of apartment houses. Do I think that's perfect? No. Do I think it's okay? Yes. I think the great lesson from the Mungers is you don't need all this damn diversification. That's plenty of it. You're lucky if you've got 4 good assets. I think the finance professors and sell the idea that perfect diversification is professional investment. If you're trying to do better than average, you're lucky if you have 4 things to buy. And to ask for 20 is really asking for egg in your beer. It's very few people have enough brains to get 20 good investments. It's going to be way harder for the group that's graduating from college now, for them to get rich and stay rich and so forth. It's going to be way harder for them than it was for my generation. Think what it costs to own a house in a desirable neighborhood in a city like Los Angeles. I think we'll probably end up with higher income taxes too, and so on. No, I think the investment world is plenty hard, and I don't think in my lifetime, 98 years, it was the ideal time to own a diversified portfolio of common stocks that updated a little by adding the new ones that came in, like the Apples and the Alphabets and so forth. And I'd say the people got maybe 10 or 11% if you did that very intelligently before inflation, and maybe 9% after inflation. That was a marvelous return. No other generation in the history of the world ever got returns like that. And I don't think the future is going to give the guy graduating from college this year nearly that easy an investment opportunity. I think it's going to be way harder. Some people are gifted enough that they can invest in hard to value, difficult things. Other people, I think, would be very wise to have more modest ambitions in terms of what they choose to deal with. So I think you have to figure out your level of skill, or the level of skill your advisor has, and that should enter the equation. But to everyone who finds the current investment climate hard and difficult and somewhat confusing, I would say welcome to adult life.